The yuan, we've seen a little bit of fluctuation just over the course of the last week. It was printing at around about 670 before. Now it's back to that 675 mark. Is there enough in the reopening to see a continued gradual strengthening of the yuan against the dollar, or is there something else in mind in your view?
Right. Well, I actually think the reopening of China is actually negative for the yuan. What happened with the yuan recently is that it's all been driven by equity optimism, but now that that's the consensus trade, I think every foreign investment manager owns a long China equity position. I think the incremental flows into the China stock market will actually slow. So from my perspective, the main trade for the yuan is China's imports of crude oil, of copper ore, of iron ore, of coal. And that should actually be negative for the trade balance. And when you add on services demand for tourism on the back of that, that's also weaker for the yuan. So we actually like to go long the Aussie against the yuan as a way to play that.
That's exactly what I was going to go to next. But the question I have there is, do you not think that there's cause for concern in the Australian economy right now? Because you look at the inflation numbers, you look at the fact that house prices from peak to trough are accelerating at an incredibly rapid clip, and the RBA, it has a very steadfastly pragmatic view that we could see, because of the absolute tear that the equity markets have been on of late, that there could be a reckoning coming for the Australian market once consumers feel the pinch of all of those loans that are going off from the variable rate, from the fixed rates to the variable rates, that it's not being accurately reflected or priced into the Australian market right now.
Right. Well, I think people have been focused on the RBA sort of slowing down for some time now. I think because they did, I think, a surprise slowdown in the rate hike cycle. I think back in October or November. I seem to forget the exact details. But I feel like the main question mark for Australia now is when China's consumer demand actually starts recovering, which it has during Chinese New Year, how that will impact the trade balance and the export outlook for the RBA. And if that trickles through to the economy, then I feel like the delta for RBA policy actually might be CPI higher rather than CPI lower, and the RBA will have to respond to that.
So the housing market, even if it was to collapse, it's not that much of a driver in your view in terms of the Australian dollar?
Well, I think the Aussie dollar market and the Aussie rates market, I think, already understands the housing price risk. But if you add the kind of mystery, in my mind, is still the China reopening, what that does to the broader economy, all things equal, should actually be positive for the Australian economy, which should be less bad for the housing market relative to previous.